I'm here with Brian Mossoff of Ether Capital. Brian, do you think the best days for Bitcoin are behind it? And I ask this because I'm constantly hearing and reading that Ethereum, which is the second biggest crypto, has more utility.
I think that both of these assets are going to continue to do well in the long term. Again, what happens in the short term in terms of volatility, no one knows. We could still see a big pullback from this point. I think, again, in a 5-year time horizon, what are these two assets really doing in the space as a whole? Bitcoin, I think, has cornered the narrative around a check on monetary policy. It has this hard cap, digital gold things surrounding it that people are buying into. Again, where the price goes in the short term, I don't know. It'll continue to play that role, though, in the long term. Something like Ethereum, though, is giving rise to a host of really interesting applications: decentralized finance, NFTs, stablecoin movements across different countries or data centers. There's a lot of opportunity for a blockchain like Ethereum. Now, you do see something like Ethereum have much higher usage in terms of the transaction fees that are being paid to use that network every day.
Okay.
And that may have some investors saying, I want to make a bet on Ethereum different than Bitcoin because I think it fills a different value proposition that's really exciting. And developers are flocking to something like Ethereum because you can do more with it. It's a more flexible structure, and that's really exciting. But it doesn't mean that it means that Bitcoin is dead. It just means that they're fulfilling different use cases in the marketplace and in the crypto portfolio for investors.
So, Brian, can we step back and can you explain what Ethereum is, and also this idea around proof of work versus proof of staking and how that fits in?
Sure. So the main difference between Bitcoin and Ethereum is that Bitcoin at its core does not have a very flexible programming language, meaning you can't ask the blockchain, the Bitcoin blockchain, to do very much on your behalf. So I can't send to a friend next week, half of a Bitcoin and ask the network to execute that for me. Ethereum came along a number of years later and said, if you make that base layer more functional, if you put a better programming language in it, then you have something more like an operating system. And you can think of this like your iPhone that's running iOS, and there's different applications. And the heart of the iPhone is that operating system that all these applications can run on. So that's what makes these two blockchains different. And people are really excited about the kinds of things that you can do on Ethereum. There are other competitors to Ethereum, but the point here is that smart contract platform, that flexibility is really exciting. And so in the latter half of last year, you saw a lot of people excited about NFTs and the metaverse. And all that activity takes place on a blockchain that has a more functional programming language in it.
Okay.
Now,
go ahead.
You want to go into the proof of work versus proof of stake question?
Yes.
So this is also kind of complicated, but we can break it down into people have to validate transactions. People are performing various activities on these networks. They're buying NFTs, they're trading, they're moving funds between different addresses. All that activity has to be secured somehow. It needs to be put into the blockchain. And so proof of work means that people are running computing hardware and electricity in exchange for the tokens that are being part of the inflation schedule. So in Bitcoin, it's Bitcoin. In Ethereum, it's newly minted Ether. And so proof of work means that they're spending electricity and computing hardware. The commodity essentially is external to the network that they're putting at risk in exchange to validate the transactions. In proof of stake, what's really exciting here is people who hold the native token Ether are able to essentially put that into a bond with the protocol and take turns validating. So it's more democratic, it's more energy efficient, and they can generate essentially a yield on their Ether. Currently, it's about 5% at Ether Capital. We think that this is a very big deal as people are concerned about the energy consumption of proof of work networks. There's a real opportunity here for these next generation networks like Ethereum to allow participants to generate a very attractive yield while holding a token that they are very bullish on in the long term.
So we only have about a minute left before the end of the interview. Brian, when I look at Ethereum price, the last I checked, it was about $3,300. I think me personally, what I struggle with is for something that has utility, how do you even begin to evaluate it, right? It's not like a traditional stock where you look at the balance sheet and you look at future cash flows. How does someone start looking at it and even understand what's fairly priced?
So this is a question that I've been asked essentially since 2012, 2013, and it's almost impossible to answer because there is no direct metric that you can draw to decide this is the correct value today. Now, what you can do, though, is I think reframe the question a little bit and think of it as an option on a very smart group of individuals who are building some really interesting applications. I liken Ethereum to New York. And there's all this infrastructure that's popping up. There's a lot of activity happening there. There's a lot of developers happening there, and they're building the roads, they're building the traffic lights, they're building the sewer system, they're putting some buildings in. And we're not exactly sure what it's going to look like in the next, 5 or 10 years. Okay. But I think it's clear that there's momentum there. There's a community there that regardless of the price that the mainstream sees and sometimes gets nervous about, there's something very special happening around Ethereum. And so I look at it as an option on that group of people building more utility, more unique things, and something very special that's going to be a big part of the next generation of the web.